The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you had a good weekend. I caught some nice little situations with my family here, so it was awesome for me. I hope you guys had a good time and settled back and thought about the future when it comes to trading. And the future right now is today. We're looking at the S&Ps. A little bit of a bounce here. Got some news from Europe and over in Asia. You know, China, 10th month in the row that the Chinese economy has kind of pulled back, so to speak, or imports actually this time have actually slowed down even more so. Europe, a little bit different news, so a little bit mixed up here. I'm not taking this as you got to catch the train, it's leaving type situation. Again, the long-term view here, this is the situation. We don't have any indicators that there's any change in tone. The long-term breadth, the intermediate-term breadth is still negative. I'm not that concerned about this. Again, I think we're just spinning around, gathering momentum to make another run for the lows. And those lows before this 1830 area on this particular contract, on the September contract, we're gonna possibly even surpass those, in my opinion. I mean, we've stayed relatively breadth negative across the long-term intermediate and really haven't shown any signs of that changing tone. Here's the 240. If you guys were trading this morning or last night, had a big number, 1937, 1938. And that was, top of the box on kind of the rate, another inflection point situation to regulate the trade down. That did not work. Take the medicine, move on. Nothing to hang on to up here. No inflection points, nothing new appearing. So therefore, in my opinion, we don't really go into the 60-minute that often, but we had an orange bar, we turned around a little bit. I mean, but the short-term inflection points are 1949.20, as you can see the bottom of our 60-minute profile, and these are all in the scanner. And on the on the 240-minute, let's just call it 1938. So again, we're going to have to start, in my opinion, showing some more profiles here on the long-term, intermediate term to really get some serious leverage on the new shorts. But right now we're still trying to play around and pick battles around what's given to us. And what's been given to us again lately is 1938. And again, we got to sit tight now. We can't really do anything. I don't feel like you have any leverage whatsoever up here. Short-term, ultra short-term traders can pay attention to 1949.20 as a little bit of a bounce area probably against the long-term trend down. But again, breakdowns below 1949, in my opinion, have to be sold. That's the situation on the S&Ps. And word to the wise, the reason I'm late this morning is don't let a friend talk you into meeting him or her off of I-95 because you haven't seen them in a couple of years and talk you into a barbecue restaurant that you know nothing about. Can be dangerous. A little bit of a stomach issue this morning because of that. Let's take a look at the dollar. Okay, so the situation here still stands. I'm not going to belabor this. 95.30, unfair lows on the weekly, stops below. Give it a little bit of a generous portion below because there's going to be some volatility around here, and that's the way I'm looking at the dollar. Still in the long camp on the dollar. Here is, let's just cover the usual suspects on our first segment here, the euro situation. And the cool thing is, wow, looky here. All right, we have a new profile. Might be burping periodically on the show today. A new profile appearing today that's locked in. those new unfair highs, 113.52. But remember, we've had some big numbers around 112.0708 to 112.25 on the euro. I'm a big fan of continuing to look at this from the short side. And why? There's that 112.25.26 we just spoke of, again, giving us a DMZ. That was the top of the DMZ between that POC on the weekly and the unfair high on the daily. If you don't watch this show very often, I know I'm speaking German to you right now, but basically we have historically been looking at 112.0708 to 112.25.26 as a kind of a collection area for shorts. All right. And that is now seemingly holding true again. And I'm feeling really, really good about hitting 110.87 and now even lower with a new inflection point down here of 108.99. Let's just call it 109 down below. Remember to put your stops in, folks, on this trade. If you put a gun to my head and tell me to pick a good trade on the books here, this is a really, really nice situation. And I love it now because now you can really put some serious uncle stops above the 113.52 area on the ultra long term. Okay. And that's the situation on the euro. Aussie dollar, man, the gift that keeps on giving. There is no end in sight, except now you do have a sign. Here's a long term. You do have a sign that it might be time to start looking at this, that we may have reached a target environment, because we're going to more than likely see a new profile appear tomorrow if this stays orange. This is a sign in itself. And I'm going to pull up the scanner after our break and show you guys that. And let me just get it going right now. Whew. Ralph's Barbecue. Stay away. Roanoke Rapids, North Carolina. Actually, it was good barbecue. I think it was actually a slaw. Got to keep slaw cold. Got to put vinegar in it. Anyway, we're going to take a look at our dashboard here really quick. Actually, we're going to get our futures. Get to that really, really quick. And as you can see, hold on 2 seconds. I need to go to my currency grid. As you can see, we've got that orange peel back going on our daily. All right. Now, when you see that, and you can filter for that, I can say, well, let me see new boxes attempting to appear on the currencies. And these are turnaround situations, possibly. It's at the very least targets that, and I'm going to go over here to my AUD USD, and I'm going to click on TAS says, and it says, hey, intermediate view, caution to shorts. Not on the long-term view, but on the intermediate-term view, caution to shorts. Targets may have been met. In the intermittent trading range could be developing in the downtrend. New demand areas attempting to appear below, blah, blah, blah. So you can read that, get a demo of this. But basically, in a quick nutshell, you can flag for situations like that by using the filter. And we've got an insane, cool new version of this coming out this week, and I know you're going to like it. I've actually got a text box that we're going to be able to notify you of certain things when they're happening, and a couple of other neat little things that are going in here. Yeah, it's amazing how Ralph was the name of the place too. But anyway, it's good barbecue. Maybe it was the slaw. I'm trying to blame it on the slaw. I hate to blame barbecue for anything. It's such a wholesome food. Guys, we're going to be right back, and when we come back, we're going to talk about gold and a couple other instruments before we get into some stocks. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. Finishing up with the Aussie dollar there. We're going to get back into a couple more usual suspects on this 5-minute segment, and then we're going to hit the stocks pretty hard. Here's the Japanese yen. Again, can't do anything with this yet. I've been a huge fan of going long this on any support and breakouts, but right now, very eerily similar to an S&P situation. We could dive lower, and just not. This is 240. I just went down the line, weekly, daily 240. If you never watch the show, I kind of tranched down that path on starting out with. We always want to start out, in my opinion, with what's the long-term view, and then intermediate, short-term. And the reason I like to do that is because on the scanner, I'm going to go back to my dashboard here. I like to at least know if things are changing tone on, the long term is the long term. I take that at face value, but I like to see a lot of times I'll go in here and I'll go, what's below the box, and then starting to show some green shoots to some degree on the, this situation. So I will come in here and I'll say, okay, well, you know what I mean? There's some stuff going on here. There's an inflection point we got to pay attention to on the weekly on UPS. And if you notice what just happened, by the way, on the scanner, not to digress too hard here, but it automatically reshuffles every 60 seconds. All right. So if new candidates meet that criteria, they're going to be slammed into this thing. And if you like a certain, let's just say you like to see top, whatever. Every 60 seconds, it'll throw those candidates in automatically for you to give you new, immediate situations that are happening on that level. So as I look at UPS, I did this. I want to see some turnaround situations possibly. I think that, we've got to get some stocks open this morning. It's still a little bit early. But this top of the box on our weekly, and then some of these green shoots that's been going on the side here. Let's just take a look at UPS. Didn't mean to get into stocks yet, but I just thought this might be intriguing, possibly. All right, so let's see this morning, 96.99, but I want to look at the action, and I want to kind of take a look at, this is not the situation. This is not the best possible situation, in my opinion, that you could get into from the long side. Here's UPS on the daily, the weekly. We're sitting kind of on the edge of the cliff. I know we've kind of poked our head above the 240s here, but I'm looking at this. I'm just flat out telling you, I think you've got better long candidates. But if you're looking at something that may be a turnaround situation, the good news is you can orient stops right around this weekly inflection point where it's telling you that we're at the bottom. So again, it's giving you those inflection points right there. There's that 95, 62, 63. Pre-market, again, we bumped up a little bit here. And that's why this showed on a sort, is that we're getting above our 240. So if you're going to play this, you've got some targets up top at $100.20. And then you've got some more targets around 187. So you got a pretty good lid up there, and you've got a decent risk reward scenario, in my opinion. Do I think the market's going to go higher? Should this stock be gapping up more on the gap up in the S&Ps today? Yes. Do I think the stock's going to go higher? In the short run, possibly, but again, I think you've got better long candidates out there. So I'm going to kill that sort. And remember, the way that I like to use the scanner is I like to find the broad tone of the marketplace. Then do the filters to find instruments that are acting a certain way relative to that, broad tone of the marketplace. And then you've got the inflection point or battle areas that you can orient initiation of trades, stops, and targets. So those kind of three things: marketplace, filtering, inflection points. That's the kind of 1, 2, 3 step situation that you can look at the scanner like. All right. So a couple other things pre-market here. Let's take a look at gold. We got about 30 seconds left here. Met some targets down below. We talked about 11.25 to 27.28, getting back down below there. And the initial targets, 111.14. I think we hit those to the tick on Friday and today. We reached the low of 111.14. So that's all in the scanner also. But we're going to have a breakdown now. We talked about that was the first area you have to take a look at. Any closes below 111.14, now you could use that as resistance to traverse down to 1087. And why 1087? That's your weekly unfair lows right there. All right, guys, we'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. Again, we were talking about gold a little bit, meeting those targets, initial targets, 1114 or 1114. Yes, that's the number. All right, so here we look at our weekly. Again, we had to close below the major inflection point. We had to close at 1121. It wasn't a significant close below that 1125 general area on the weekly unfurlough. But again, gold's not wanting to really get away from that area on the upside, in my opinion. We've already kind of rattled around here between 1125 and 1114. Do I think we're headed to a 1087? Unfortunately, I think that may be the case. But again, you've got a great DMZ up there to orient stops above 1125, 1126, 1127. Those are based on weekly and daily profiles, and those are powerful numbers because those particular two time frames are ones that I just completely rely on as a trader to really give me the bearing of kind of what landscape we're in now. For guys who are just looking at this from the long side, I personally think you need to get back above that area and kind of use that as your stop-oriented situation. But right now, I just don't see. Had a little bit of a move up in gold this morning. Here's our 60-minute without question. But those are noisy situations at best, in my opinion. Here's silver. Check who's. Here's silver. Getting back above 1460. And we talked about, I'm sorry, headset's freaking out here. We talked about the situation in silver, and we looked at this a little bit of a divergent situation. I told everybody I'd rather be short gold than silver right now based on that. And silver's kind of, showing a little bit more strength than gold in the last 2 weeks, or not 2 weeks, but the last week, I guess. Here's the number you got to focus on silver, 1460. It's pretty easy. You can orient stops below there, and then you've got some targets above if you want to do that short gold, long silver situation. You've got targets above of 1507 and 1523.24. I'm just not a big fan of going long either one of these products right now. So if you had to put a gun to my head and force me to trade one of them, I'd trade gold from the short side. I think you've got some indications on silver that we may have a little bit of a pop here, but not a big fan of going long either one of those. Crude oil. Crude oil, Al. Crude oil. I'm not combining the two words, even though it sounds like it. Here's the situation on crude oil. So as we look at this, what do? We've talked about letting this thing spin around, trying to keep stops below that 43.5 area. And we've almost reached some targets above on Thursday. We talked about trying to let this thing gravitate back up into 49, that general area. But, what really happened, there's the big number, 48.71. I'd rounded that off at 49. We actually came extremely close to that in the rally on Thursday. And that rally on Thursday, or was it Thursday or Friday? Is that Friday? Let's see here. Thursday, I'm sorry. So Thursday, we reached a high of 48.42. That was within 29 cents of the 48.71 weekly unfair highs again. You've got to be looking at those neighborhoods as target-rich environment. But again, I'm still looking at this as a little bit of a long play here. And I know we've had some volatility, but, got a new profile appearing. We're kind of crowding it. We could have another pop on crude oil, but you've had two really good runs after we had closed above, come back and retested for a powerful bounce up into those weekly unfair highs, and then we did it again. In my opinion, this is, kind of doing the flag pennant situation. We could move higher one more time, so be aware of that on crude oil. Crude oil. Let's take a look at some grains here before we get into the stock situation. Long term, that's soybeans, November beans. I know this is staying above our 861 area, but I'm really terrified that we could have another move down, believe it or not. I know that sounds insane. We've been talking about 825, 850. What did we hit a couple of weeks ago? 855. I think we could, I'm not a big fan of going long beans down here. It's there's a massive crop out there, and I know weather scares and all that kind of jazz can affect that, but supposed global slowdown is not helping that situation either. And I actually think the dollar's going to continue to get stronger, which won't help that situation either. There's some things stacked against that trade from the long side right now. And that's not a timely piece of information for you to trade on a short-term basis. I'm just telling you my long-term. I think you can pick beans up on sale later, put it that way. All right, let's take a look at Shanghai. We got to take a look at that one. All right, so they got back in business, had their markets reopen. Here's our intermediate. Here's our daily. Here's our weekly. Where does this thing head now? All right, so the question and the answer to the question is, if you're trading Chinese-related ETFs, the scary news is that they could say anything to make this thing gap up or gap down 5 or 10% one way or the other. It's not a situation for a long-term investor to play around with this. I don't think the Shanghai's on sale. And I do think that there could be some more downside, believe it or not. I know we've pulled back tremendously, but I don't think all the shoes have dropped on this particular equation. And you're also continuing to get news events out in Shanghai, which may already be factored in. And you've also got government intervention going on. So I don't know if this is a natural tradable product right now. I mean, it's when you have kind of a rigged marketplace or bid rigging or whatever you want to call it, it's very difficult to use pure technical analysis. So that's the situation there. Let's take a look at IBM. We got to look at this one. IBM back in the early 90s, you could just trade the S&P futures by looking at IBM. It was a nice situation. Okay, this morning we're gapping up 145.75. So this is the situation on IBM. Is this does this look like the S&P graph right now? No, it doesn't. And are we continuing to scale down below profiles and use those inflection points to test this stock? Absolutely. How do you trade this now? In my opinion, I think you get short, and I think you put stops above 150 based on your appetite for risk and let this thing unwind, because if the market continues to go lower, and we're kind of basing some of this part of this trade on that concept, but the good news is if the market just does a moonshot and goes up 100 S&Ps all of a sudden, you want to put yourself in a situation where you're playing defense first. We always talk about that. And playing defense first means finding stocks that are showing their hand that nobody really is excited about buying. Let me say it again. You want to find stocks that are showing their hand early, that people are not clamoring or interested in catching them on dips. All right. This is one of them. All right, so we're going to take a look at Netflix. I get a tremendous amount of emails about this. Okay, and the good news is we're trading. I think this is real. Yeah, 102 pre-market. So just make sure I get my right days here. God, it feels good to burp. 102 is pre-market, and we had pulled back into this inflection point 97.87. We talked about this is a stock, in my opinion, you've had some reasons to short it, getting below 120. We talked about not playing around with this from the short side until that happened, and then we were rattling around up there. This was a stock we talked about wasn't the best short candidate. Now you seemingly have put a floor in on it again around 97.87 into that 189. And why is that the case? We're getting back above 189. People are going, oh, is it over for Netflix? I get the emails. Is it time to short it and put it in my grandkids' college fund? No. No. This is because, but I've got 100 points upside. No. The answer to that is no. Let's take a look at Amazon. All right, so let's take a look at Amazon. So again, you got a runaway freight train that's acted very well, all things considered. Trading about 500 on Friday. We're gapping up to 507 this morning. All right, so now We're getting back above this 504.09. So intermediate traders can look at this, placing stops below 504.09. This is again, it's not a stock to short. I don't care if it's $1,500 a share. It's $500 a share, and you've got better shorting opportunities out there. Okay, let's take a look at the scanner, and let's pull up some situations, and we should have some. The sad thing is the data feed companies are not going to convert over to the weekly and daily prints very well here, but we've actually got. Let me just go to like on Alcoa. We've got real-time prices here. Now, the interesting thing on Alcoa, and the reason I pulled this up is we talked about some green shoot situations. I'm just going to pull up Alcoa, and I didn't pull that up because it was the first stock on the list, basically on the S&P 500. But I wanted to show you something. The good news is when you look at Alcoa in the scanner, we always talk about, what's showing the new profile. So let's do that. Let's just do new box. And boom, there's Alcoa, the first one, the yellow peel back. And these are stocks, remember, that say caution to shorts, targets may have been met. And you've got top of the box situation here. So, and you've had some green shoots happening on the 60 and the 240. So, this is the weekly, and this is that new box attempting to appear, new profile. That's at least a target situation on the downside. We've reached a low of $8. I know we're trading $9.50 and maybe even higher than that this morning, $9.77. So again, more than likely going to have a new box pop in here today. And we're sitting at the top of our profiles here, seemingly wanting to test breaking stride, first time since 14 or 15 on the weekly when we broke down. If we start getting above this profile here, Alcoa actually, and we started getting hints of this, getting above $9. And we started that process of the orange bar attempting to appear on the weekly literally in the middle of the week last week. So we've closed above here Thursday. We kind of pulled back. We're rattling around here, sitting at this 950 area. And the question is it time to buy this? I don't think it's a bad time to take a shot. I don't like buying stocks right now in general. But, stops below $9 on this. We're trading about $9.50. Could have a little bit of a pop where that will be determined by where this profile is appearing here. And we probably are going to have a relatively wide profile on Alcoa. All right. Are there better longs out there? In my opinion, yes. But if you want a little bit more riskier trade, you've got some things lining up here that the scanner's telling you to, situation here. It's just might be something worth looking at. All right. So we're just going to take a look at Apple, and there's so many stocks we can go over. We're just going to cover a lot of the ones that I get emails on. Similar situation on Apple. We're going to have it happen. All right. What do you do with Apple? We're trading a 111.40 pre-market. Apple's, we've talked about this. We're kind of in no man's land. There's not a lot to hang on to on Apple. This thing's going to herk and jerk around. But the overall tone of this stock is bearish. And if the market pulls back at all, I think easily we could see 102 again. All right. So you got about a, 8-9% clip that you could look at on Apple to take advantage of. And you've got inflection points on the shorter term to sell at 113.30, and then initial targets 109.18, and then even lower at that 102.26 on Apple. I know if you guys are long Apple, you don't want to hear this, but the technical damage happened on this. I did a Bloomberg article on this. They published it. It went out to quite a few folks in the institutional world, and that 125 area, that breakdown there was very significant. And it coincided with a big market pullback, which, Apple could have possibly been looked at as leading the way on that one. All right. We're going to be right back, guys. We got about 5 minutes. We'll hit a couple of things, and then Larry will be on. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, somebody was asking me at Den about how can they get to the Bloomberg article that I wrote. These are called Bloomberg briefs. They send them out to, here it is. This is on Apple, and I just kind of plainly stated in the simple things that we look at every day. And this is a really good, maybe not lesson, but just a heads up on, these institutional guys. And I actually put Juan Villegas, our director of South American operations, in here also. But this is a good heads up that these institutional guys are looking for the same type information. You guys might think that there's some crystal ball that somebody's got that, wears the white shoes and tie that goes out and talks on CNBC and sounds or tries to sound like they have their act together. These guys are a lot of them are below the average retail trader in their knowledge base of technical analysis or, just wherewithal when it comes to trading. What a lot of these guys do is they raise money. I mean, they look for help. In fact, a lot of the, things that we come across in, in the institutional world and with the Bloomberg guys, not to bash them too hard, but they just want to go out and raise more money. They want somebody from a credible source to give them credible signals or information, and they don't want to learn anything. It's amazing what they take at face value, and I guess they probably should. I can't argue with let's go spend all of my or let them go spend all of their time go out and raise money. But things like this. I mean, we've got the scanner form. It's an app in the Bloomberg app portal, and this is the article. But there's no crystal ball to this. I mean, there's no, behind the eight ball that you guys are at. I mean, you're getting really good information, and you're getting, you're getting that information on a much more constant basis than a lot of those guys. They just kind of flip through it's amazing. It was shocking. It was appalling when I first I come from a heavy duty kind of blue collar trading environment in Chicago up in the Board of Trade. And that's the real deal, but when you listen to a couple of yahoos on the tube, it's a lot of those guys aren't traders, and they have a, just like in 2008, we talked about, it's like, oh, when there's blood in the streets, you got to buy. I mean, do that every month in 2008. And then you got margin calls and you're out of the game. And that's basically what happened to those guys. And now they can afford to say, see, you should have bought all these dips. It's wrong. What I did on the scanner, I got about a minute left here. What I did on the scanner was I pulled up, what's sitting at the bottom of our profiles, and more importantly, what's sitting at the bottom of our profiles on the daily also. So the weekly and daily, there's two candidates here, Salesforce and Whirlpool. And this is a sort that I really, really like. All right. So we're going to take a look at Whirlpool and CRM, which is Salesforce. I've got Whirlpool up right now. So the scanner has alerted me that we are in the vicinity of our unfair lows on the weekly, and we closed below. Actually, when you look at this, you'll see this on the landscape chart. I'll pull this up, and there you have it. This is our landscape chart on Whirlpool, all in the scanner. But when you go into the daily, I mean, this is a stock that's kind of starting to underperform these bounces, and we're sitting at a precipice here. And the good news is where the Orient stops above 165.5, so to speak. Same thing with CRM. All right, these stocks are showing their hand. They don't want to get off the lows. They should have already bounced a little bit, and that's what I'm trying to say. Stay tuned. I think Larry is going to have a recording today. And then, obviously, stay tuned for Tom O'Brien on the Money Masters Live at 10. See you soon.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
is TFNN.